right now is probably the best time to explore the market bottom. So especially if we look at the seasonality chart based on the US midterm elections. I first presented the midterm election cyclical chart in probably the first or the second week in January. So if you're interested, you can definitely go back to the session and just to check it out. Because at that time, I think that was kind of early as it's just right within in January. So I think right now we just passed the first half of the year, and that's definitely the right time to just revisit the cyclical chart again. So why the cyclical chart or the seasonality chart? I mean, it's also similar to the analog chart, which I always show you, whether it's just portion or whether it's compare different instrument or compare different years. So why do we use them from time to time? And also, how do we use them? So first of all, I think that's quite important because we really need to know why those chart actually work. So those analog chart, those cyclical chart always work until it fails. So that's the caveat. So history doesn't really repeat itself, but it often rhymes. Okay, I think that's probably all of you will know that it doesn't repeat, but it often rhymes. So I think that really explains the why. So that's why we always want to study the history, and we can get a lot of the insights out from the history. So a lot of the analog chart, seasonality chart, whether it's from the different instrument or from different years or even from the different time frame, they always provide a lot of the insights. So how do we use it? So it's very straightforward. If we find that it's working, we use it until it fails. All right, so it's as simple as that. So use it whenever it's working and until it fails. So if it fails, what happened? What are you going to do? Then you just abandon the chart. As simply as that. All right, so what does the market bottom mean to you? I think in the end of this section, I will just go through what does it really mean, because unless you are trading the markets, which is like the S&P, NASDAQ, or Russell, or even the Dow, you probably don't really want to care too much about the market, right? If you are trading stocks. But anyway, I think that's really some kind of the implication to you and to the individual stocks as well, which will definitely go back and answer the question. So right now, let's jump into the seasonality chart. So this is the midterm election seasonality chart from SeasonX. So you can definitely check it out if you really want to study the seasonality, because I think it's probably one of the best sites to show you with all those seasonality charts. And that's based on 72 years. Okay, so lots of the data. I think that's as many years as I can get from that site. So that's based on 72 years of the data for the S&P 500. So I think this chart really is kind of self-explanatory, because the first pane here is the seasonality chart based on a midterm, and second pane, the bottom pane, is actually the current price for the S&P 500. So you can definitely see that there is very close relationship between this chart. So first of all, in order to study the seasonality chart, we want to see whether it's sort of working, or whether should we just tweak it to other time frame or other years, things like that. So I think so far, S&P 500 has been working fairly well or extremely well just based on the seasonality chart of the midterm elections. So let's just go through month by month. So first of all, January, you can definitely see that I have already highlighted in the chart. So January is a downtrend and coming down. And what happened to January in 2022? Coming down, and in fact we get a selling climax right here, and subsequently there is an autonomic rally. So in the seasonal chart, probably is not that significant for the automatic rally, but still we get a rally out or the relief rally out from the oversold condition. So this is the relief rally. Okay, so that is the relief rally. And subsequently, there is consolidation. And in February, I will say if you want, that's a consolidation as well. And eventually, we get a lower low test, but here we get sort of a higher lows throughout. So here's a lower low test until March. There comes a big rally. So here's a rally. Okay, so the rallies actually go all the way up and probably create a higher high. But here's a good rally, so March rally, but it did not really go back to take out the high in January. In fact, it's sort of just coming back to test or even create an uptrust in probably February high. So that's the automatic rally. Okay, and subsequently in April we got a reversal. So a reversal happened in April. So in April we also got a reversal and followed by the worst down move ever. Okay, the worst down move happened in April, and also is shown in the midterm elections seasonality chart as well. And what happened in May? So right after that, in May, we sort of got a localized solid climax, and that is a relief rally. So in May, we got a relief rally, and after that, a reversal happened. So a reversal happened right here, coming down, create a lower low, coming down, create a lower low, which just happened a few weeks ago. So based on the seasonality chart, you can definitely see that the first half of the year works extremely well. So if you just follow this midterm election seasonality chart as a blueprint at the start of the year, it'll probably be quite easy to do the swing trading. Although there is a bit of the timing off, especially in April, because in April it's kind of just reverse straight away, but in a seasonality chart, you kind of get a consolidation, and also in April we get a consolidation, but we get a sort of lower low test as a down sloping consolidation. So that's pretty much it for the difference, and also in terms of the magnitude as well. So the key to use this kind of the seasonality chart is not like using it one-to-one or 100% for the chart, because what we really want is to just get the direction right. Okay, so as long as you get the direction right, for example, in January it's a downtrend, then you probably can ride a downtrend, and in March, if it is an uptrend going up or swing up, then of course you can definitely trade it, ride the rally in March. And obviously in April, if that suddenly is another swing down, I think that certainly is quite a good swing trade as well, and also in June as well. So these are all the good swing. Of course, if you want to trade the upswing, you can trade it in a May upswing as well. So that's possible, and I think it's quite feasible as well. So use it as a blueprint, and I think you will get quite a good results when you only trade the market, like the S&P 500, doing the ES, the E-mini futures, or using the SPY ETF. So that comes in really handy. So right now, what happened to the seasonality chart? So we are in July. So you can see that July is a consolidation. So starting of the consolidation all the way into September. So you can definitely see that I'll call it a bottoming process. So the bottoming process is just strictly based on this seasonality chart of the midterm elections cycle. So if that really comes true, means that it's still a reliable tools that we can use it as an analog, then what we can expect in the S&P 500 is definitely another trading range. So how will be the trading range look like? I sort of mark it up in this chart here. So I expect probably you will just bump into the axis line. So I think that also is quite a feasible location or the reasonable location, because that's where the previous support become resistance. All right. So 42 or even 43 maybe create an uptrust. maybe not in S&P, perhaps in Nasdaq, because it's kind of outperforming. So that's possible as well. So this is how I really anticipate this kind of the bottoming process. So of course, this really just based on the midterm elections cycle seasonality chart of for the past 72 years, because so far you can see that it has been working very well for this S&P 500 or the market. So I think it's still reliable and we still can use it until it doesn't work anymore. All right. So just use it until it fails, until it doesn't work. So far, I'm still anticipating a big move like I covered it last Sunday. Potential big move coming. That's based on the price action and also the market breadth as well. So Nikki say, guess some things never change despite after 72 years. Yeah, I guess that's the amazing part about the cyclical chart or the seasonality chart, because a lot of times, apart from applied it in, let's say the commodities like crude oil, wheat, corn, those sort of things definitely got seasons, right? Because it's like the agricultures, and also sometimes the demands just come in certain months. I think that's sort of expected. That's why seasonality really works well in the commodity and also in the index as well. But here is the midterm elections cycle, and I guess that it actually affects the market quite a lot whenever there is an election, whether it's the presidential year or whether it's the midterm. So it's always good to have a benchmark or the reference to go back to study. Okay, so if we just based on this chart is very straightforward and simple, then we can expect a trading range. So how do we use this? So right now, if this will come true, what does it mean to you? So first, there's just some ideas. If you're trading the index, like using a CFE or using the just straightforward future contract, just a micro contract, that's fine. And I think that will be quite straightforward and useful. And you can just buy near the support and then sell near the resistance. And you can play a few rounds. You can definitely tell here, resistance, resistance, support, support, and support. So buy low, sell high is the game plan for the trading range. So, and also there's ETF for the market like SPY, Q, and also there's options. But I think the main part or the main focus, if you're not really trading the index, that's totally fine. But at least you should be just focusing on the stocks. So why did I say that? Mainly because that if the market is entering the bottom process, means that it still can be very choppy. So might not be that easy to trade like buy low, sell high. It might look simple on paper here, but in real life, reality, it could be difficult. So unless you are kind of used to trading, whether it's a day trading or swing trading, or as long as you are the experienced type, then it could be challenging as well. But if you are just focusing on stocks, I think there's a lot of the benefits, because while the market is actually bottoming, a lot of the outperforming stocks will actually start to move up. So those outperforming stocks will be the next multi-baggers in the next bull run. So while it's actually forming like going nowhere, maybe it's just consolidating, going nowhere, it's just a horizontal trading range, but you can definitely see that a lot of the stocks, those type of the outperforming stocks, which I'm going to share with you a few, and as in the usual weekly watch list, and also I'll be introduced in the announcement that those are the stocks, the outperforming stocks that are really great for position trading and also investing. So those are the stocks that you definitely want to go back to study to find the right entry. If you are the fundamental guy, then you want to study them as well if it is for investing. If not, just purely for position trading or swing trading, that will be very handy. Because if the market is actually bottoming, like it's not going to have another fierce leg down, something like this, then I think it should be very good environment at least for those type of the outperforming stocks. So just focus on outperforming stocks and start with the swing trading, and eventually you might able to move it to the position trading. And when the market really just confirm itself, maybe kind of in September or October, kind of another accumulation structure here if you look closely. So a localized spring action followed by a sign of strength rally, backing up, coming up, breaking out. So change of character on the way out. Then that actually kickstarts the uptrend. So the accumulation actually completed right here. So when that actually happened, I think the headlines will just focus on the bull news. But within this bottoming process, I believe that the sentiment will not be good as well. So we'll still have a lot of the bad news coming out while the market is bottoming. Okay. So I think that's really good, because if we really want to just concentrate on the stock itself, then I think that really provide a lot of the opportunities for us to just capture the outperforming stocks and then to ride the bullish move up. So that's just right before the crowd, the public come in. So that's certainly something that we want to pay attention to. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.